In the dynamic world of futures trading, timing is everything, whether you're trading commodity futures, index futures, or currency futures. One important aspect that a futures trader must master is the concept of rollover. Hi, and welcome to our excellent YouTube channel. I'm Soh. In this video, I will be sharing with you what is rollover in futures trading and how to do rollover specifically for the FKLI contract. When you're able to do rollover your futures contract, you are able to follow the market trend for a longer period. We have got great content coming up to help you improve your trading and investing knowledge every week. So be sure to hit that subscribe button and turn on the notification bell so you don't miss out on any of our informative updates. Thanks for tuning in. So let's get started. So why do you need to roll over? When you buy or sell a stock, you are buying or selling an ownership in a company. There is no expiration date for holding a stock. So you can hold your position as long as you want without needing to roll over to a new contract or position. In stock trading, since there is no expiration for the positions you hold, the concept of rollover doesn't exist. Whereas for futures contract like FKLI or crude palm oil futures and any other futures product, they have expiration dates because they are derivative contracts. A rollover in futures involve closing a position in an expiring contract and opening a new position in a later contract to maintain exposure in the pre-existing trend. In futures trading, rolling over means transferring a position from one contract that is nearing expiration to another contract with a later expiration date. So we roll over because we believe the market trend will continue in a specific direction. Later, I will share with you with examples so that you can understand it better. Now, let me give you an analogy of a rollover. It's just like renting a house. Imagine if you are renting a house for a fixed period, let's say 1 year. As the end of your rental contract approaches, you need to decide if you want to continue living in the house or moving out. So if you decided to move out, you simply finish your rent, you pack up and find a new place to live. So this is like letting a futures contract expire without any further action. You do not need to do any rollover. So at the end of the period, you no longer have a position in that contract. And if you want to stay in the same house, you sign a new rental contract for another year. So to do this, you first end your current contract, which is like closing a position in an existing futures contract, and then sign a new contract for the next year, which is like opening a new position in a futures contract for a later date. So by doing this, you maintain your residence without interruption, similar to how you maintain your market exposure by rolling over your futures contract. So how do you do rollover? Here are the 4 steps of how you can roll over your FKLI contract. I will explain each step in the next few slides. Step number 1, you need to monitor contract expiration dates. You need to keep track of the expiration date of your current FKLI contract. A spot month or current month FKLI contracts typically expire on the last business day of the contract month. So it's essential for you to plan your rollover a few days before the expiration to avoid any liquidity issues. So when do you roll over? Most traders roll over their futures contract a few days before the expiration date to avoid the potential volatility and a lower liquidity that may occur as the contract near its ends. Traders usually roll over when the liquidity starts shifting from the current contract to the next month's contract, And this typically happens a few days before expiration, as most traders begin trading the new contract. So for example, in this case of August, you can roll over during the last business day of August, which is 30th of August, or a few days before this date. Step number 2, you need to close your current position. On your trading platform, you need to close the position in the expiring FKLI contract. And this involves selling if you are initially having a long position, or you need to buy back if initially you are holding a short position of the futures contract at the current market price. Step 3, open a new position in the next contract month. Immediately after closing your current position, you open a new position in the next month's FKLI contract. Make sure you're opening the same type of position, whether is it long or short, and in the same quantity to maintain your exposure. And lastly, step number 4, confirming the rollover. Double check that both the closing of the old contract and opening of the new contract have been executed correctly. Well, what you need to do is that you check the contract month, whether you have closed the old contract and open a new contract. Check your position size. If you are trading 2 contracts initially in the existing contract, make sure when you roll over to the new contract month, you are holding the same quantity as well. And lastly, make sure your total net position is only 2 contracts. If you are holding 2 contracts in the existing month and have another 2 contracts in the new contract month, you are holding a total of 4 contracts altogether. So this is like taking additional positions in the market and would expose yourself to additional risk. There are several considerations when you do rollover. The first one thing, which is the rollover price. Do take note that the new contract month may have a higher price or lower price than the existing contract month. And that's okay, because that is just the structure of how futures market work. Remember, the purpose of rollover is because we believe the market trend will continue in a specific direction. So we do rollover by switching from an expiring contract month to a new contract month. Second thing to consider is your rollover transaction cost. Rollover involves transaction cost, including brokerage commissions. So when you roll over by closing an existing contract month and opening a new contract month, this is counted as 2 transactions. In conclusion, by following these 4 steps, you can effectively roll over your FKLI contract and maintain your market exposure. Rolling over is an easy thing to do when you understand how it works. So that's it. I hope this video has been helpful in guiding you how to do rollover effectively. If you find this video informative and useful to you, please share this video and give us a thumbs up. And if you haven't already subscribed to our channel, please consider clicking on the subscribe button and turn on the notification bell so you don't miss any future videos. Thanks for tuning in. Until next time, this is Soh. Good luck and good trading.